If you have a rental property burned down, or you have some sort of other catastrophic accident happen and you can't rent out the house anymore, you should still get paid rent even when nobody's living there. So I would say that one of the top reasons people don't want to buy a rental property is because they are scared that they're going to have to pay the mortgage from their own pocket. And then I see unfortunate stuff like this where they say that they had to cover the mortgage for 4 months on their own because of a roof issue. And you guys, I cannot stress this enough, but this is why it is so important to have the right kind of insurance on your rentals. So the insurance that you have on your rental properties is not the same kind of insurance that you get on your primary residence, because you don't really care about it covering this stuff on the inside of the house. And this insurance does go by a couple different names, whether it be landlord insurance or rental property insurance. It is significantly less expensive than insurance on your primary residence, so make sure that you speak with your insurance provider to know what you're getting. Now here is for the really important part, so pay attention. You need to make sure that the insurance on your rental property includes loss of rent coverage or fair market rent coverage. For the most part, at least from what I've seen, this covers up to 12 months of the fair market rent on that property. So if you have an issue where you need to get your tenants out of that property and it's not being rented for up to 1 year, this will still pay you rent during that time. Anyway, guys, it pays.
Wow. So there's a lot to unpack with this one. It's not going to cover up to 12 months, but that's why you should have a proper policy on here that has fair rental value coverage built into the policy. There is going to be a number on there. The insurance carrier will pay up to the coverage limits for that specific loss. Not going to pay you for just, hey, I have a vacant property. It has to be a covered loss and the house has to be unrentable. They're only going to pay you for the loss of rental income for the least amount of time that that particular risk was not able to have a tenant inside. Therefore, as soon as that house is able to be rented, they're not going to continue to pay you after that. These types of policies are called DP3 policies or landlord policy. What he talks about with not covering what's inside is typically personal property is the responsibility of the tenant to insure their own personal property on a renter's policy, because keep in mind, you have to have insurable interest for the insurance carrier to actually pay out anything. I'm not sure that I would necessarily be following his guidance, but he has the right line of thought that everyone should make sure that they have a proper policy that has fair rental value accounted for within their policy. That's why working with a broker is so important, is to make sure that you have the proper amount of coverage for things like loss of rental income built into the policy and make sure that you're properly covered for any risk that you're purchasing.